Morning, class. Today we are working on March control test end of term examination. So we just want to work on these questions and discuss the answers that can actually fit into these questions thereof without wasting any time. You know very well that instructions are very important when you're answering or when you're entering into exams. So I'm not gonna go through the instructions. However, we just go straight and answer the questions. This is Economics Grade 10, Term 1. Uh, uh, Question 1.1.1, goods that are directly used to satisfy people's needs and wants. Goods that are directly used to satisfy people's needs and wants, they are called, these are called consumer goods. They are called consumer goods. Consumer goods, we are saying they are bought for satisfaction or for direct consumption in order to satisfy people's needs and wants. So, capital, we are saying they are being bought for resale. They are bought in order to make money, in order for them to continue being used in the production chain or in the distribution chain. In terms of capital goods, you find out that capital goods are bought and then maybe there is a breaking of bulk that can take place, or they are used to manufacture other goods, or value addition is done in order for them to be sold so that more money is going to be made. But if they are to satisfy direct needs and wants, we say they are called consumer goods. An open economy is an economy with the foreign sector. An economy which is called open is called economy because we do have the operations of a foreign sector, which ensures that we are saying there is import and exports. If those are there, we say that there is international trade. We have international trade. So when we have international trade, we are saying that the economy is open because it allows the movement of goods and services across the borders. That is what we mean by an open economy. All other participants, these are nationally recognized participants, which we can say it is within the country or within the country as borders alone. If we talk about government, household, and business sector, these are basic participants, but they do not imply the concept of being an open economy. So open economy is defined by having a foreign sector. The lowest turning point of a business cycle is known as a trough. It is known as a trophy. A trophy is the lowest turning point of a business cycle. And then I want you to understand that it can be, it depends with the factors behind the economic performance of the country or of uh, of the state. So now we are saying its lowest point is called the what? It's called the trough. And the opposite of a trough is a peak. A peak is the highest point when the business activities or when economic activities have reached their best performance limit. We call that a peak, which is the highest. And the opposite of highest is the lowest, which is a trough. And then an indicator that changes before the economy changes. Before the economy changes, we talk about leading indicators. Leading indicators, they do change. They are there to show that before before the economy changes, we have got signals, we have got signs that can identify that the economy is gonna go through a certain phase of economic performance or economic experience. So what we are saying is that leading, meaning to say that they do change before the economy changes. That's what we call leading indicators. Lagging is the ones that are lagging, they change after they are behind the changes in the economy that is lagging, but leading is the one that are ahead of the changes. And then coincident, we are saying they are happening at the same time. If you talk about coincident indicators, they do happen during the same time. The changes and also the indicators, they are happening more or less simultaneously. These are the rights that every living person should have. We are saying human rights. Human rights are the rights that every person must have. They are entitlements that are enshrined in the uh, United Nations Charter that every person, because he is human, irrespective of any other factors, a person must have the rights to education, rights to choices, rights to participate in elections, and so many. We are saying those are called human rights. They are entitled to every person who is uh, alive and whatever. So then what we are saying is human rights are rights that every person should have. They are rights which every person must have because he is a person, he has to have those rights. And then we need to match the column uh, B with items in column A, and we write only the answer next to the question number. Number, we are saying 1.2.1 matching of terms. So a peak, as we just said, what is peak? A peak identifies economic activities at their highest point. A peak identifies economic activities whereas they are at the highest point. We call that a peak. That is what we call a peak. Identifies economic activities at its highest points. And then consumption, it actually defines we are saying using using up goods and services to satisfy human wants and needs. That is consumption. When consumption, using up goods and services to satisfy human wants and needs, we call that is defined as consumption. That is defined as consumption when goods and services are used to satisfy human needs. We are saying they are being utilized, and therefore that is consumption. Double counting, from the choices that were given again, double counting, actually identifies uh, uh, G, national figures are inflated by counting all market values. National figures are inflated uh, are inflated by counting all market values. To say that we look at national figures and then they are increased, they are spiked, they are increased by counting all market values. So they are too high. So that results in double counting. And then economic economic goods, uh, economic goods. We need to see that these are economic goods. These are goods that have exchange value and can be bought. Goods that have exchange value and they can be bought. We are saying they can be bought. They have got an exchange value. They can be exchanged, meaning to say one person can need them. We can exchange or we can see ownership of them being changed because of transactions involved, because of selling involved. So we say those are economic goods. That is what, that is B. Economic goods are goods that have exchange value and can be bought. Natural resources, natural resources We talk about these as earth-given resources. So we do have water, soil, minerals, and fossils. Fossil fuels, they are called natural resources. See, they are called natural resources. Natural resources, we talk about all these examples: water, we talk about soil, minerals, and fossil fuels. And then households. Households are a group of people that live together and make economic decisions. A group of people that live together and they make economic decisions. We call that households. People living together and make economic decisions. As we see, we have talked about this, can also be defined as consumers. These are the consumers in the economy. We talk about public in general. We talk about the government. We talk about, households. We talk about the households as in terms of our consumers in general. And then we need to give one term for each of the descriptions, and we write only the question number and the answer next to the given question number there. So Latin word that means all things remains the same. All things remains the same. All things remain the same. It is known as sentence paribus. Sentence paribus identifies that all things remains the same. Things remain the same. Sentence paribus. Ceteris paribus. And then a statement involving a conjunction value judgment. A statement involving a subjective value judgment. A subjective value judgment. We can say normative statement. That is called normative statement. Subjection meaning to say exposed according to the given scenario, to say that this can actually be applied specifically according to an observation and thinking of a person. So we are saying it is subjective to a particular situation or to a particular being. So raw materials or natural resources are extracted and cultivated in this sector. We talk about raw materials. Raw materials, we have them from the primary sector. Primary sector, it actually gives us the natural resources. We get them from there. We extract natural resources through the primary sector. It is actually the sector of the economy that deals with natural resources and extraction of them. The value of the next best alternative that is given up, that is called opportunity cost. Opportunity cost. Opportunity cost identifies the value of the next best alternative that is given up. People have got decisions or have got choices, and out of all of them, we cannot be able to satisfy all of them. But when choices are being made or decisions are being made, certain alternatives are sacrificed. So those are next sacrificed options. We call that opportunity cost. That is defined as opportunity cost. The cost of living a certain alternative that might have been taken in terms of decision making or choice making. Give any two examples of public goods. Examples for public goods. We talk about these as in terms of, we can say, we have got police services can be an example of public goods. Police services. We talk about education. Education is a public good. Education, we are saying these are services or goods that are provisioned by the state. We talk about healthcare. Healthcare, we have got healthcare. We can also talk about uh, road services. They are all examples of services or goods that are provisioned by the state. The state ensures that these are given to people. The state has got a role or has got a mandate to ensure that people receive and get them. They are also charged very low prices. Basically, charges are very low, that quite a lot of times you find out that they are given free of charge. And why is the gross domestic product important? Gross domestic product, it is important because it measures the economic growth from one year to the next. It is used to assess, it evaluates economic growth in a country across different years. In order to understand how the country is progressing, it can be measured through gross domestic product, total goods and services produced within the country over a period of a year. Usually, it is measured and are calculated as a percentage. So we are saying it enables the economists and government planners and everybody to understand how much the country is progressing or it is suffering. So it is important to understand economic growth. I mean, GDP. It is used also to determine the standards of living of people within a country. Standards of living of people. Standards of living of people in a country can be assessed. The living standards of people in a country can be assessed. This is based on the level or the percentage value of economic of gross domestic product. If GDP is good, it means production is high. When production is high, people are working, people have got employment, production is taking place, goods are going to be sold at better prices, such that we can therefore certainly understand that the living standards of people is actually, or people are living better. We can actually understand that uh, affordability of goods and services is also somehow uh, achievable to people. It can also be used as an indicator of economic activity within a country, which we say that the economic activity within a country can also be checked through gross domestic product. We study the diagram and answer the questions that follow. 2.2.1, name one career choice when doing economics. In terms of doing economics, there are career choices that can actually uh, come with it. These include career choices. A person can be after economist, after doing economics, people can work in finance. We can talk about finance. When somebody has done economics, you can work in finance as a financial officer. We can talk about banking. We can talk about banking. We can talk about credit analysis, credit analyst. We can talk about consultancy, and also maybe even being a teacher. A person can become a teacher, can become a teacher, can become a lecturer after doing economics. These are career pathways that can be found. Somebody who have done economics investing on. So we say you can work in banking, you can work in credit analysis, we can work in financial as a finance officer. Also understanding that you can as well work as a teacher or a lecturer, which science can be combined with economics. Science that can be combined with economics. We can have, we are saying these can be subjects that can be combined with economics. We can talk about one, maths. Economics it is a commercial subject, so it can be combined with mathematics. It can be combined with accounting. We are talking about combination of subjects that can go along. It can be combined. It can also be combined with statistics. That can also be business studies. It can also be combined with business studies. We are saying these subjects, they can all fit to work together with economics. And then I think again we can as well give IT there, information technology. Information technology can also be another subject that we can see that it can also combine together with economics without any problem. So next question saying describe the term career. What is career? When we talk about career, it actually identifies a profession, jobs and positions that a person can hold during working lifetime. It is a profession, we can say job or jobs positions that a person or an individual can hold. A, a person can hold during, which you can say during his working life. The position, the profession, jobs that an individual can hold during his working or her working life, we call that a career. What is it that the person is doing during that time, which is actually quite a lot of time. It also it is influenced and affected by experience. It is affected by educational achievements. It is affected by uh, training that the person has gone through, which at the end of the day, it defines uh, it defines the also the remuneration the person can receive, also the form or the type of payment that the person can also get is underpinned within this career thing. And then what is the effect of not having a career? If a person does not have qualifications, does not have a position, does not have any experience, how does it affect it? One, we are talking about when a person has no career, the person lacks knowledge. There is lack of knowledge. There is lack of knowledge. A person can lack knowledge. We are saying if a person has no career, knowledge is also absent in that case. That person can also not have knowledge, and then uh, the person cannot be able to get work also. It is difficult to get work, inability to secure employment, to secure, they are difficult. I mean, it is quite difficult to get employment if a person has got no career, and then it can also result in a person's inability to perform, and a person cannot be able to perform well at work. A person cannot be able to perform well, cannot be able to perform. A person cannot be able to perform well, and then this can also result in opportunities can be missed. People without a career cannot also have opportunities. Opportunities cannot be achieved easily. People will not have opportunities to pursue in life. And then why should people consider their interests and skills when choosing career? This actually they should know what they want to do for the rest of their lives. That is the importance of that. Why should people consider their interest and skills when choosing career? One, we are saying they should know what they want to do in order for them to know what they want to do. They want to do for the rest of their lives. So that we are saying you need to know the interest, because this career or this choice of work, the person is going to do it for the rest of his or her life, in order also for them to choose a career that complements their interests and skills. In order to choose a career that complements their interests and skills. We are saying that match their interest and skills. That would also help to avoid boredom and stress. So in order for them to to work better within their career, they are matching their interests and skills with their career, such that the performance of duties within the career can be what can be easy. It can be easy for them to perform within those career pathways. We also need to understand that it can also help people. People should also be able to adapt easily to changes. It helps its adaptation to changes. It helps its adaptation to changes. People can adapt easily to changes because of the interest that we are talking about. They are able to make themselves fit within the career pathway that they have chosen. Those are some of the answers that we can give. And also, I've been saying that they know what they like the most. People must know what they like most. People need to know what they like most. They need to know what they like mostly. If you know what you like mostly, you are also able to pursue it to the end and even advance as much as possible. So we need to study the information and answer questions that are next. We are given in this case, question here given, it identifies the circular flow model. The circular flow model is given here. We have got the product market, we have got households, we have got A and B, goods and services being brought to the market, product market. We have got factors of production are brought to B, labor, capital, entrepreneur skills, and many other are listed. So household, the sell factors of production, and we are saying the sell factors of production, we are given that goods and services are also bought by households. So this is a circular flow model class that is given here. What does the block B stand for? What does block B stand for? This is product market. Who brought goods and services to the product market? This is actually identifying firms. We say firms or businesses. Businesses or firms identified B, they are the ones which sell goods and services to to the product market. And we say that they receive revenue. They sell goods and services and receive revenue after selling them to the product market. So I'm saying it is firms or businesses. And then which type of economy is illustrated in the circular flow model above? The type of, we are saying the type of economy that is illustrated in this case. What we say that the type, we have got two types, closed and open. In this case, we do have, it is just a closed economy that is shown here because we don't have the foreign sector. This is a closed economy where we don't have, we are saying because foreign sector is not there. Foreign sector is not present. So for that reason, we are saying it is a closed economy. This is a closed economy that is being shown in this case class. This is a closed economy. And then briefly describe the term production. Production, it actually refers to a process. It's it's a process. It's a process where an entrepreneur, we are saying, combines available resources and turns them into products. A process by which uh, entrepreneur entrepreneurs, we can say investors, they combine available resources. They combine available resources in order for them to produce products needed at the market. These products needed at the market, they basically satisfy human needs or wants. So production has to do with manufacturing of goods and services through available resources, which is done by either entrepreneurs or investors. That's what happens with the production. Goods and services are produced in order to meet and satisfy human needs and wants. We call that production. And then what will happen to national income if imports increase? If imports increase, uh, we say that imports, in terms of imports, remember we said imports naturally are a leakage. Imports are a leakage in the economy. We are saying we are reducing our national income. So what happens is that this it results in decrease in national income, results in decrease in national income. National income, it becomes less because it's more like we are spending a lot and we are taking out our income. So as we take our money out, what happens is that there is a decrease in national income that has to be taken into account with reference to that. That is one key thing that needs to be understood there. Differentiate between real flow and money flow. We have talked about the circular flow model, the real flow and money flow. The real flow, it identifies movement of goods and services and factors of production amongst the participants. Real flow identifies movement of factors of production amongst we are saying amongst uh, participants in the economy. It identifies movement of factors of production amongst participants in the economy. And then what we need to know is that in terms of this, we talk about households. They sell They sell their factors of production in order for them to get money, and business enterprises, they combine and transform these factors in order for them to produce goods and services that they sell to the market. So money flow, whilst money flow, it actually shows the movement of money in the form of income. It shows the movement of money in the form of income. It actually shows the movement of money in the form of income and expenditure among the participants, in the form of income and expenditure among the participants. The movement of money in the form of income and expenditure among the participants, we say that is money flow. So now, what you need to understand is that our businesses, they purchase the factors of production. Businesses purchase factors of production. This is the income, which we are saying, this is income of what? Of households. When businesses purchase factors of production, households, they receive money, they receive income, and households spend their income to purchase goods and services as well. This is also income to the enterprises or to the business enterprises. So what we are saying is money flow, it talks about the exchange or the movement of money between the economic participants by buying and selling or by transacting amongst each other. That is money flow. That explains money flow. And then explain exogenous reasons for business cycle. Explain exogenous reasons for business cycle. This actually identifies reasons. The exogenous reasons are reasons for business cycles that actually originate outside outside the market system. Identifies reasons for business cycles that originate, which we say they originate outside market system, originate outside market system. And then we need to understand again that this, we can talk about changes in weather conditions affect the output of agricultural sector and tourism industry of an economy and the total level of economic activity. As an example, say, for example, changes in our weather conditions, changes in weather conditions. What do they do? We are saying they affect agricultural, affect output, affect output in agriculture, and tourism. They affect output in agriculture and tourism. And also, what we are saying is that and the total level of economic activity within these sectors, and total economic activity total economic activities are also affected. So what we need to understand is that as we look at this, when the economy, for example, does have, when the economy has got structural change, it affects production, it affects employment, it affects investment, government expenses, taxes, imports and exports are also affected by structural change, which we need also to talk about. Variations in the money supply also cause business cycles. Variations in money supply also cause business cycles. We are saying changes, variations in money supply also do affect in money supply causes, they do cause business cycles as well. I'm sure that you know that the ability of consumers to buy, we talk about their disposable income. If disposable income is less, consumers are not able, or customers, our households are not able to buy. So the availability of money in the economy affects the supply and demand. So this also leads to business cycles again. Uh, we need to understand this. And then we talk about some random shocks also, which can also just happen. Random shocks. Random shocks. For example, we talk about we can talk about war, we can talk about natural disasters. Natural disasters. Natural disasters. What do they do? We also say that they also cause business cycles. They cause and affect business cycles. We see, for example, that people cannot be able to produce and work efficiently and effectively when there is war. And also we are seeing natural disasters, such as we talk about floods and so forth. They do affect the supply of certain commodities at the market, which at the same time we are saying these are factors which are outside. We are saying they are factors which also originate outside the market system, but they do affect business. They do affect our business performance. Uh, name any two factors of production. Name any two factors of production. Any two factors of production. I'm sure you know that in terms of factors of production, we have got land, we have got capital, we have got labor, and then we have got entrepreneurship. We have talked about this to say there are factors of production that we need to understand, to say when we look into factors of production, those are factors of production that we need to know, to say that they do, we have got four of them. So here we are asked to name any two. So we are saying lengthy, we need to have the space where production is taking place. That is land, it is appearing as a factor of production. We also need to talk about capital. Money is needed in order for business to run. Money is needed. We need money in order for businesses to run. That is very important. That is quite important. And then why do people have to make choices? Why do people have to make choices? Choices are made in order for people, because we need to have, we are saying people have unlimited needs and wants with limited resources. That is the reason why people must make choices. It is because people have unlimited needs and wants, because people do have an unlimited needs and wants. They do have unlimited needs and wants versus against with limited resources. Resources are limited, but they do have unlimited needs and wants, so they have to use their resources wisely. Human needs are insatiable. They are uncertain. We cannot satisfy all of them. So we need to go through opportunity cost in order for us to get the best out of this. And then study the diagram, the information below, and answer the questions that follow there. We are given 3.2, 3.2, study the information below and answer the questions that follow. So we are asked again that, as you can see, item consumption by households, amounts that are given there, and then gross domestic expenditure is 360,000, GDP at market prices, which is also given as unknown. So the question is saying, identify the method used to calculate GDP in the above table. This is a production or income method. As you can see, it's production, income, or a production method. It is income or a production method. That is in this case, we are saying we can see that we are given the income which is being there, and then we are having our gross capital formation, as to say in money that has been made through the various work stuff that the economy has gone through. So we are saying it identifies income or a production method, and then name other method that can be used to calculate GDP at market prices, except one identified above. At market prices, we talk about production method or income method. However, we also have gross domestic product. We are saying this, we also need to understand that in terms of this, we are saying this is the expenditure method, which we are saying expenditure method has been given in this case, expenditure method, and then we can also have other methods that can use at market prices. Is therefore we talk about that is when we talk about the production. We can talk about the production or the income. The production or income method can also be used in this case. We are saying consumption expenditure. Consumption expenditure marks it to be right that we can say that this is an expenditure method. It is called consumption expenditure. Consumption expenditure by households, government expenditure. We are saying this identifies the expenditure method that is being shown. in this case. And then next question is saying explain the following components GDP x expenditure method is equals to C plus G plus I. So gross domestic expenditure is equals to, we are saying this is gross domestic expenditure is equals to, this is equals to consumption expenditure by households is equals to consumption by households. Consumption by households plus government expenditure plus government expenditure. It is plus also investment. That is just a formula for we are saying the gross expenditure, which is we have got expenditure by households, expenditure by government, and also investments. We say that gives us that C plus G plus I. I represents investment, government expenditure, and household expenditure. Briefly describe the term gross domestic expenditure. Gross domestic expenditure. It actually defines. We are saying it indicates total value of spending originating within the borders of the country. It identifies total value spending. It identifies total value of spending. Total value of spending originating within the borders of the country. Originating within the borders of a country. So in other words, we are just talking about total spending within a country. Total spending within a country is what we call gross domestic expenditure. We are talking about national spending. This is national spending. In other words, national spending identifies what we call gross domestic expenditure within the borders, within the state. So we are given calculate GDP at market price, show all your calculations. In this case, GDP at market pricing, this can be GDP at market prices. This, we are saying it has to say we add gross domestic expenditure plus exports on goods and services, which is plus we say minus our import on goods and services. We say this at market prices, GDP at market prices, GDP at market prices is equals to, we say that this is equals to gross domestic expenditure, gross domestic expenditure plus it is plus exports on goods and services plus export on goods and services export on goods and services, we say minus import on goods and services minus imports on goods and services. That is GDP at market prices, which therefore we are going to say this is going to be given as this can be calculated as 360,000 plus 45,000 minus 65,000, which is going to give us our 340,000. That is GDP at market pricing. GDP at market pricing it's calculated as that. It is calculated in that regard. I'm saying gross domestic expenditure plus exports minus imports. Domestic expenditure plus exports minus imports, which I have said that we have got 360,000, which is plus 45,000 minus 65,000. That is going to give us 340. That will give us 340,000. That is what we mean by GDP at market prices. GDP at market prices. And then the question below answer the questions. The question is saying identify the trough in the business cycle above. The trough, we say it's the lowest point of a business cycle, which is the lowest point. We say that is a trough. So the lowest point of a business cycle, we have got what? We have got A. It is A. A marks the lowest point. What is the line Y called in economics? We are saying the line Y, it is called the trend line. This is called the trend line. Y identifies the trend line. It identifies the trend. It is called the trend line. It is called the trend line there. And then briefly describe the term business cycle. It actually, business cycles, it is a consecutive period of increasing, is a consecutive period of increasing and decreasing, increasing and decreasing economic activities. We call that, it is called business cycles, a period of increasing and decreasing economic activity. We are saying which is consecutive. We define that as business cycle. Explain the recovery phase of a typical business cycle. The recovery phase of a typical business cycle, we are saying that it is actually characterized by factors such as, we are saying, recovery phase, it is characterized by an increase in manufacturing production increases. Manufacturing production, it increases during recovery phase. We have got interest rates, they fall in interest rate, because we are saying people are supposed to be encouraged to borrow in order for business to go. So interest fall in interest rates. We can also talk about decrease in inflation. It is also characterized by decrease in inflation, that the value of money money gains value. Money gains value, so therefore inflation decreases so that people can buy. And then rand appreciates and exports grow. We talk about appreciation of the rand, and also increase in exports. Exports will also increase so that the business can be able to do better. And then what can government do to smooth out severe decreases in business cycles? What can government do to actually smooth severe decrease in business cycles? Government can also, it decreases decrease in taxes so that people can be able to borrow money. We also talk about taxes and interest rate. Interest rates also decrease in interest rates in order to encourage borrowing and also business performance and investment. We can also talk about allowing exchange rate to appreciate, promote appreciation of exchange rate. They need to make their currency to gain power in order for it to buy better. Exchange rate appreciation. Government also implement job creation initiatives in public works. Government, it also initiates job creation in public works. People must get jobs in order for the economy to do better. We can talk about provision of education and training in order to improve the skills of people. Investment in education and training for bettering employee skills. Skills of the citizens. Government invest in skills development in order to improve the skills of their people. That is very important as well. That is very important. And then discuss recession phase of a business cycle. We talk about this. We have got businesses start to prepare for bad times by trying to repay the large part of their debts. Businesses actually they start to prepare for bad times. Start to prepare for bad times in terms of recession. They prepare for bad times by trying to pay their large part of their debts. They pay their large debts. It's a challenge that the businesses have to do. They also selectively lay off workers. Selectively lay off, they lay off employees. Selectively lay off workers in order for them to survive. They are trying to reduce expenses. We also talk about spending by households and profits. We also have spending by households and profits by businesses start to decrease. Spending by households decrease and the profits fall. Profits fall down too. There are low profits. Profits they start to fall as a result of decrease in spending by households. Households, as long as they spend less, profits they fall as well. We also have the central bank. It also applies stricter monetary policies. Stricter monetary policies are applied. Applied by central bank. Central bank applies stricter monetary policies. Inflation is high. Inflation is basically high. So the inflation is high. So the central bank has to input or put policies that are actually supportive or that can actually protect them in that respect. They actually use policies that can support and enable the government, the economy to survive. We can say macro and microeconomics. This is micro and we have got macro. So in terms of this microeconomics, I'm saying micro, it means at a small scale, it focuses on, we are saying with microeconomics, it actually focuses on the end of results, or it actually looks at aggregates. It looks at aggregates spending, and then in terms of we are saying this micro, it actually looks at individual individual performance of businesses at micro, and then macro is actually as a whole. Then we are looking at the economy as a whole, and also at a national level versus at a micro, versus at a individual business. Micro is at a small scale. Individual firms or businesses. Here we are looking at total aggregate demand at national or international level. If you got to look at this, we are saying we need to understand this in those respects that if we look at macro, it focuses on the end results or aggregates of all repeated micro activities. That is, when we look at macro, and then economic changes in the overall economy are influenced by decisions of millions of individuals and businesses. In terms of macro, economic changes in the overall economy are influenced by decisions of millions of individuals, influenced by decisions of millions of individuals and of businesses. And then in this case, we are looking at we are at micro, we look at price theory. As how prices affect consumer spending. We talk about the bread basket. We talk about the consumer price index. How does it affect the consumer price index being affecting the ability of consumer spending? So what we need to know is that micro and macro we are saying it applies in terms of what? In terms of macro. It applies in terms of macro. That is, economic changes in overall economy are influenced by decisions of millions of individuals. So class, thank you very much for your time, and let's keep following, and let's keep checking in. Metric Hub is there to support and also to empower us. Have a beautiful time and keep connected. Thank you.